Spain's funding costs are set to fall at auction on Thursday after Moody's affirmed the country's investment-grade credit rating and as markets expect Madrid to ask for aid soon. The Treasury plans to raise €3.5 billion to €4.5 billion, $4.6 billion in an auction of three bonds maturing in 2015, 2016 and 2022. Results of the auction will be published at around 0840 GMT. The auction comes on the heels of a successful T-bill sale on Tuesday, when the Treasury sold more short-term paper than expected at lower rates than a month. Thank you for trying verbose. This recording will go away once the product has been purchased. Earlier levels in the secondary market, considered a good guide to primary auction results, showed that while yields have eased on all three bonds since they were last sold, the longer-term issue remained under the most pressure. The supply should be well covered, especially the shorter-term bonds. But our focus will be on the 10-year, which has seen fairly weak demand, and the effect of Moody's rate strategist at RBS Harvinder Xiang said. The market is still looking for the timing of the aid request, but the danger is that if the thank you for trying verbose. This recording will go away once the product has been purchased. Market continues to rally. The Spanish government hold off from appealing for help. Spain is the most recent focus of attention in the almost three-year-old Eurozone debt crisis and has seen premiums on benchmark debt soar to near unsustainable levels on concerns Madrid cannot control its finances in the midst of a recession. Madrid is under growing pressure from investors and many European counterparts to ask for aid from the Rescue Fund in order to trigger a bond buying program by the European Central Bank. The ECB buying will focus on maturities of a thank you for trying verbose. This recording will go away once the product has been purchased. 2-3 years, which may also explain part of the pressure on Spanish longer-term yields. The country dodged a bullet late on Tuesday when ratings agency Moody's left its sovereign debt rating one notch above junk, in line with that set by rival Standard & Poor's. But even Moody's suggested it should seek aid, saying, the combination of euro area and ECB support and the Spanish government's own efforts should allow the government to maintain capital markets access at reasonable rates. Uncertainty premium. The premium investors demand to thank you for trying verbose. This recording will go away once the product has been purchased. Hold Spanish over German debt fell to its lowest level since April on Wednesday, though uncertainty over when Prime Minister Mariano Rajoy will ask for aid meant the difference held at around 400 basis points. Spain has been ready to ask for Eurozone help since the beginning of the month via the precautionary credit line, European officials have told Reuters. But the request has been delayed due to German reluctance to sign off on the accord, sources say. Of the debt on offer on Thursday, the bond due July 30, 2015 was trading thank you for trying verbose. This recording will go away once the product has been purchased. At around 3.2% on the secondary market on Wednesday, compared to an average yield of 3.676% at its last primary auction September 6. The bond maturing October 31, 2016 also saw support, trading at around 4% compared to 4.603% on September 6, while the 10-year, due January 31, 2022, was trading 5.5%, just below the average yield of 5.666% on September 22. Political uncertainty continues to plague Rajoy, with regional elections in Galicia and the Basque Country on Sunday and the November 25 election in Catalonia where pro-independents thank you for trying verbose. This recording will go away once the product has been purchased. Sentiment is heating up. Meanwhile, analysts are increasingly doubtful Spain can meet its deficit targets amid the deepening economic slump, rising debt costs, high social security bills from pensions and record levels of unemployment. For investors, the possibility of ECB intervention in the secondary market if Spain requests help continues to support the Treasury's outings into international markets. Despite the concerning fundamental backdrop, we see little evidence that tomorrow's supply should go anything but well. The market remains broadly supported by the credible ECB backstop provided Spain requests conditional aid. Citi thank you for trying verbose. This recording will go away once the product has been purchased. Said in a note to investors.